down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, Savvy Investors, today, man, one of the people that I admire, if you don't know him, you need to know him today, is Tim Herriage from Dallas, Bigger Than Big, loans money, consults, speaks, ran an investor expo, still has one, I can't keep up with all the companies this gentleman owns, operates, and leverages time. I'm just honored to have Tim Herriage on the phone today. Tim, say hi, and how long you been in real estate?
Thanks, Stephen. So this month actually marks, 14 years been buying and selling houses and all the things associated with that fantastic business.
And so you started out, now there's got to be a backstory. I know you're really big into finance now, which is called paper money in my world. How did you get into real estate? Who turned you on to it?
On accident, or as my grandmother would tell you, I cut my teeth on it growing up. So my grandfather was a real estate broker in the Dallas area. Both my parents were in the real estate industry, but after I got out of the Marine Corps, served some time as an intelligence analyst in the United States Marine Corps, and I put my resume on a website called militaryhire.com, and literally that's how I got into the business. Real sexy, right?
No, yeah.
And some guy hired me to be his project manager, and it's, a long road, and 1,500 houses later, now I hire people to be my project manager.
That's awesome. So, you started out in the trenches, buying and selling houses, fixing them up yourself, kind of, I guess. Everyone has cut their teeth somewhere in that process. That's why we don't do it anymore, because it's dumb. What turned you on to the finance? Like, what was the transition there?
I first started financing houses, I guess, in 2004. So what is that, 12 years ago? Recently helped Blackstone get a big company started, B2R. And I've told many people at Blackstone and other places, the cycle of people getting into real estate investment finance is almost always the same. You start figuring out that you can make a lot of money on financing assets. So back in 2004, I was doing a lot of wholesaling, and I had a business partner with a lot of money. And I said, well, what if we just kept the houses and owner financed the investor? Because we were noticing that on our wholesale deals, almost everyone buying them was getting a hard money loan. So it's kind of one of those, it's like, wow, that's like 12 and 4 on top of the $5,000 we're making. And then, if you get geeky about math like I do sometimes, you're actually making 12 and 4 on a markup, which is like fictional paper, right? Because that money never really existed. So now you're making 4 points on your $5,000 profit, which is cool. And then, it's like $200. That's a lot of money. And then you're making, 12% interest a month on that $5,000 that never existed. So that's like, another, $50 a month. And if it took 4 months, then you made, it's just like by the time you ended up adding it up, and then you could sell a house for more because you were offering financing with it. It was just kind of a natural evolution. It was fun. And that's kind of how I got into financing. And just through the years, I met a lot of different people that wanted help understanding the customer. And I think that's really where my niche is I understand the customer. And the customer are people like me or you when we bought our first house or our second or our fifth, right? The customer isn't me now, right? I'm not the psyche of the normal customer. So I attracted some big institutional guys that were looking for some help, and gosh, it's been a fun ride.
So how did you, I know there's got to be a niche, right? There's this hard money out there, and then there's institutional money, and then there's like community bank money. And then out of nowhere, B2R comes out of the woodwork and is all of a sudden a nationwide company loaning people all over the country real estate loans that a lot of banks are missing out on. Was that foreseen? Did you know the success of that company would be like that so fast?
Oh, for sure. just like anyone else that's ever gotten into this business, they started out as a buyer before they started loaning money to investors. And they did it through their Invitation Homes business unit that went out and bought, $5 billion worth of houses in 2.5 years. So they got really comfortable with the asset class. And when we sat down, it was very much by the way, I had no idea I was going to be helping them start a company or I was going to actually go work there full time. I was thinking we were just having a conversation about the business. And we kind of spitballed it, right? I mean, it's like, well, what do the terms need to look like? Well, here's the securitization strategy. This is what the capital markets look like. And, we made a bunch of mistakes at B2R, but we did a lot of things right. And at the end of the day, the real estate investor, when you really think about from a business standpoint, the real estate investor is like one of the most valuable clients you'll ever have in any business, because the lifetime value of a real estate investor is exponentially larger than the lifetime value of having a customer that's like a typical residential customer. Because in a typical 7-year buying cycle, the average homeowner will complete 2.3 to 2.8 real estate transactions, whereas the average real estate investor will complete 21 real estate transactions. So, it's like, they may be half the price a lot of the time, but even then, right? I mean, if you take 21 divide in half, right? I mean, you've still got 10 and a half. If you divide that in half again, just because, I don't know, you feel like haircutting it, well, I mean, you still have a number that's worth 2 times what the residential customers were. So, we knew it would be successful because real estate investors have always made up over 20% of the housing market and will continue to make up over 20% of the housing market.
No, I didn't know that statistic. That's awesome. I know that this lending space is very competitive in hard money, and you're not hard money. Is there competition in what you're doing in that arena?
Yeah, I mean, there's competition everywhere, right? And one of my finance mentors, and he was the president of B2R for a while, said the advantages in lending are fleet. Just really meaning think about the hard money guys in Dallas. If tomorrow one of them came out and said, we'll do a hard money loan for 10 and 2, the rest of the people in town would, complain and moan and grimace, and then they would say, yeah, me too. And that's the way all lending is. It is very much a me too, race to the bottom. There's not a whole lot of advantages. Money is money. At B2R, we really only did permanent financing. At 2020 now, we offer any loan any investor needs. We can hook them up, so to speak.
Like short term, so you're almost like a quasi private money, hard money, and a traditional bank. Like you offer all those like a one-stop shop, right?
Yeah, I mean, so what we're setting up is a broker operation. So when you think about it, when the average person buys a home, they don't just walk into Wells Fargo and take an FHA loan. Actually, even though Wells Fargo is like the nation's number one FHA lender, most of the loans are actually sold to them on the secondary market. Most people have their realtor will tell them to call a broker, the broker that they choose, and that broker is able to talk to the customer and then go into this massive database of products and find the product that works best for the customer. And that just doesn't exist in our space, right? In our space, in the investment space, if you want to get multiple hard money loan quotes or to know what your permanent financing options are, well, if you want 5 quotes, you got to make at least 5 phone calls, right? I mean, if you want to know the difference between the B2R loan and the First Key loan, well, you got to call B2R and you got to call First Key, and then you can call BlackRock, and then you can call Colony, and then you can call 5 Arch, and then you can call FCI, and then you can call, I'm leaving one of them out, Lending Home, right? You can call Lima One. Before you know it, you've called 9-10 people. Most of them don't speak the same language as you, meaning, Wall Street people, I feel like they are from Mars. My first 2 months at B2R, on the conference calls, all I did was sit there on mute and Google trying to figure out what they were talking about. And, which was kind of funny, right? I was the only one on the call that had ever bought a real estate investment property, yet I was the one that didn't really understand what they were talking about. And I think that still rings true today in the nationwide finance market.
Well, that was my question. I'm like, how do you gap that reality they're up there in their white ivory tower. You're down there in the trenches trying to bring the two together. You're like this bridge between big finance, Blackstone, hedge fund, giant money, billions of dollars, all the way down to a $50,000, $100,000 loan. There's a big gap there. You're like almost like Jesus. I'm not comparing because I love Jesus, but you're like laying on the ground, like sacrifice. How do you stay with the reality? Because you could easily just flip and they'll recruit you and you'll just be one of them. How are you staying grounded in reality as a real estate investor?
So two-part answer here, right? So number one, I think Blackstone and B2R were really smart by hiring someone like me and bringing me on to help them start the company, because they knew that they had that disconnect and they knew that they needed that ground level experience in the business. So, hats off to them. It was a great idea and I sure did have a blast. And like I told you earlier, I'm still have a significant interest in them being successful long term. So, but the way I've always just stayed grounded is I talk to customers, I talk to investors, I go to networking events. I mean, this Saturday, actually, like 4 days ago, I was looking at houses, people that had called off of my acquisition company's postcards. My business partner and the buyer were out of the office for a wedding, and I walked in the office and said, hey, I'll take all the appointments this weekend. So this weekend, I was wearing boots and jeans, going around making cash offers on houses. And I've always made sure I keep doing that because that's the real business, right? I mean, that's what keeps me grounded. That's what I've sat in every seat on the boat and wrote and pulled every oar. So, and I continue to do so. So I think that's part of the magic that we have here is that we really get the customer because we are still the customer.
That's awesome. So B2R was on the team. Now you're kind of veering over into your own kind of mecca of services. What's in your eye now? One of these companies that you have, is it the Elevate Private Capital, H&R Acquisitions? What's in your hindsight? Obviously hindsight for 2020 REI, but what's getting you juiced up?
Well, as my partners would tell you, too much gets me juiced up. Last week we were going to start a title company and I was going to start another construction company. And what was the other one I was going to start last week? Gosh almighty, there was something that was a great idea. There's a ton of ideas. I think for me, the two businesses that are the most exciting right now are the real estate brokerage and the mortgage brokerage. Because for too long, my people, which when I say my people, I mean the real estate investor, we've been forced to kind of operate in the shadow. And we don't get to be like everyone else in the housing market we don't get to function above board and we don't get to, really, I don't know. It's like we've always just been forced into the corner as right. The people that don't exist or the people that are bad or, and so it really excites me to be able to do something different about that, to be able to change that. And that's what I can do, with the brokerage that we've started. And that's what I can do with the mortgage brokerage, the real estate brokerage and the mortgage brokerage, because investors need quality representation so that they don't have to rely on back of the room education. And that's the biggest problem with our industry in my mind, is that the only way to learn it is to hope that when you hear about it or Google it, that you end up with one of the good guys, because there are a lot of bad guys in the business. And if you Google it right now, most of the people that come up are going to be someone that wants to charge you $50,000 for a weekend of their time. And then they're actually going to put a sales guy from Nevada on the phone that's never bought a rent house or may own one or two rent houses that they pay $35,000 a year. And that he's going to tell you that you need to go waste $150,000 on probably the wrong 3 projects. Oh, I hate it. And I've been there.
It's so true.
When I got interested in this business, my first year out of the Marine Corps, I was watching a late night infomercial and I bought a box of books and tapes for like $400. It got there. I opened the box and it had a bunch of other boxes in it. And I didn't know which box to open first. There was a nice little piece of paper that said, call this number for help. I called, and for another $2,500, they were going to tell me which box to open first. And I stuck it back in the closet and it never got open. I think I auctioned it off at an event one day. But if you want to buy a house to live in, that's not the way it works, right? What do? You call a realtor. What does the realtor do? Realtor pre-qualifies you and gets your information. Then they hook you up with a lender. Once they've done that, then they show you houses that fit your desires and goals and lending capacity. After that, what do? If you need a contractor or something, they refer you to someone. I mean, that's the way it works. And it works really well. It's the reason that they're the largest trade association in the world, right? I mean,
and I think you said it right from the beginning. I mean, people got to pay it forward. I mean, I wouldn't have 130 properties if, this guy that took a liking to me and let me drive in his pickup truck every day for free, and he just showed me houses, what he paid for them, and how he financed them, and I dreamed of being that guy one day. And 16 years later, I'm just, amazed that I'm even talking to you on the phone. I mean, it's just fascinating to me. But you can do it without paying $40,000.
Yeah, I mean, if you're going to pay $40,000, pay it for a house. I mean,
go buy a crib. All right, so we could beat that up to death. So, all right, well, we'll talk about your companies here in a minute. Let's get back. I saw you speak at the Real Estate Investment Expo down in Dallas. You had a great seminar. It was like reflection, not enough rentals, wrong partners, wrong rentals, wrong financing, rehab capacity. That was my favorite.
Competency.
Oh, capacity. Yeah. I mean, that's just how fast I was writing my notes down. You were blazing through. Do you remember that? It was
yeah.
Awesome.
I mean, I felt like that was one of my best speeches I've given in a while.
It was just no BS.
From the heart, man. It was good stuff, I felt like.
I think what was the rehab, we're just not educated. Talk about that aspect of it. I think a lot of people are motivated. There's opportunity to get money. There's deals out there, but then they get into rehab and then they're out of the business completely. What are you talking about in your presentation about rehabs?
After $1,500 and $1 billion worth of transactions, what I've realized is there's really three levers or switches or numbers that can change with a house, right? What you pay for it, what you spend on it, and what you sell it or lease it for, right? I mean, it's like those are the three numbers. And the thing that I learned now looking back is what you pay for a house is largely and predominantly determined by the market. The market, like in Dallas right now, we can't show up to a house without having 9 people showing up within an hour of us. So there's a lot of competition. So you have to pay what you have to pay to get the house. And just because you're a nice guy or just because you and your wife need some money doesn't mean you get a better deal on the purchase. And on the same token, when it comes time to sell the home, it doesn't mean that someone's going to give you more. Now, there are sometimes you can do some value add things to get more, but by and large, the market is going to tell you what you can sell the home for retail or what you can lease it for. And those three numbers or those numbers end up determining your ROI. So the only lever left is rehab. And I think I said this back in January. I'll say it again. You're right. I mean, to me, there's 2 types of rehabs: over budget and way over budget. And and that's our biggest weakness. That's our problem. Our problem is the thing that we're focused on getting better on. Literally, we have a full-time person now to help us get better on this, is getting our rehab where it's scalable and predictable and lowering the cost, right? So if everybody out there is going to look at that house as $80,000 purchase, $20,000 rehab, sell it for $120, break even. So everybody's going to be, and so everybody's going to be offering, so everybody's going to be offering 70 to 75. If you can do that project for 15 instead of 20, you have a $5,000 advantage. And the people I know that aren't having trouble finding inventory right now, they're the ones that have their own crews and have low cost of rehab.
But, I mean, it sounds glorious. But how do you tighten the screws down? I mean, obviously you've been in that pickle, both sides. Is it just because of the job foreman that you're hiring that's managing the job? Is that what's saving you? I mean, how are you tightening the screws down?
So I think the first step is a good scope of work. right? Too many investors go in and they don't really bid contractors off of a scope of work, and they don't button down everything they want done on the front end, which then exposes them to change orders. And as one of my favorite contractors in the world says, that'll be extra, right? I mean, it's like, come on, man. But I mean, look, it happens, right? I mean, so you only want to have to put the screws to someone one time. And so just little things, like if you're going to end up putting a fence, make sure you know you're going to put a fence up, right? Because what happens is I see a lot of investors, and I do this from time to time, you spend a little extra on blank because it's in the budget and it would be nice, when it doesn't really get you anything extra. And at the end of the day, you didn't need to do it to get the price that you were going to get it. But you went ahead and did it because it was in the budget. And then all of a sudden, well, someone tells you got to put a fence across the backyard. So now that's an extra $3,000. Now you're $3,000 over budget. Or you didn't plan on the oil rub bronze fixtures. Instead, you thought you were going to leave the gold stuff in the bathroom. And you come back and do it later. And you probably could have just put a different countertop on in another room and used satin nickel fixtures. I mean, there's a whole lot of scenarios. And to me, the way I kind of have licked this problem is I have a project manager or general contractor go through a home with the realtor that's going to be selling the house for me. And that realtor can tell the contractor what needs to be done and what doesn't need to be done. And so what I find is a lot of times there's until you get to the volume where you can have a full-time crew, you're going to have to use subcontractors. And, it's just, you got to have some good advice. Someone saying, no, you don't need to replace that countertop. No, you don't need new cabinets. Let's paint them and put granite on top. I've seen so many investors yank stuff out that didn't need to be yanked out, and then vice versa, not yank things out that should have been yanked out. And, and then just another great rule of thumb is never, when you're rehabbing a house, don't pay someone to call someone that is then going to turn around and call someone else to do the job, right? I mean, you got to watch out for the layers upon layers of markups. I mean, literally, I always use carpet as a great example, right? If you got a general contractor that's going to call his project manager to call a carpet company to actually send the 5 guys in the truck with the roll of carpet out, you are probably paying 25 to 30% too much, because those other people making those phone calls they got to make money. I mean, they get paid somehow. So you always want to be no more than exactly. You always want to be no more than 1 to 2 at the most steps away from the person with the paintbrush or the hammer in their hand.
You hammered the point down. I learned that the hard way, and I just actually this year started really micromanaging the scope of work because, I try to keep a crew going, then I stopped and then just went and GC'd everything, and I just got hammered by not having the scope of work. When I have a full-time staff member, I'm like, oh, yeah, we forgot to caulk those windows. Oh, yeah, we forgot to put those light fixtures in. No big deal. But all of a sudden, if I had a real contractor doing a bunch of change orders, I just lost $300 times 10. That's 3,000. You hit it on the head. I think
it's a lot of money.
Focus on, rehabbers out there, flippers, whatever the freak you are out there. Make sure you spend an extra 30 minutes, an hour grinding down the scope of work. And I think it's great. Well said. Great advice. And you'll pocket that money, and that's your advantage. That's your unique selling point in this, heated market. All right. Back to this.
Yeah. So on that, by the way, what my business partner taught me to do was turn your phone on airplane mode. Everybody has an iPhone or a smartphone. If you don't, go get one. Put it on airplane mode. Turn on the video camera. Walk through the house and just talk out loud. Oh, I'd like to do this, or oh, need to do that, or oh, and walk through every room with the camera and then give it to someone that can make sense of it. And that's really the best way that I've found to make sure that you're communicating with your people of what you really want to do, what you don't want to do.
Fabulous advice. All right, we're getting to the time. I know you're extremely busy. Let's wrap this up with you got hammered down in Dallas on predictions. I saw you pull your tie a little bit. What's your predictions? I know things are slowing down. What's your 5-minute spiel, your rant on what's happening in the market? Where's it going? and the hope and future of life in real estate?
I think we have 18 to 24 months of a good market left. I'm a big Warren Buffett fan. So go read, his latest letter to his shareholders, which was I think this weekend for Berkshire Hathaway. He thinks that everybody's being doomsday-ish, that the core fundamentals of America are still strong. I think if you're in a market that has limited supply, which most do, you're going to be fine. Watch out for getting on the edges of the market. So if you're in an area where the median price is $200,000, try to stay in that 200 or lower market, because what happens is when there is a slowdown and there's a contraction, it hits the high end of the market and the bottom end of the market first, and everything kind of squeezes towards the middle. So the closer you are towards that median price, the safer you'll be. I think you really got to focus on rentals, buy and hold properties. The buy and hold properties provide income, and it's inflation indexed. And I'll tell you this, in 2007, when 138 mortgage companies went out of business and the stock market started the roller coaster ride down and then finished, going down, and then over the next 12 months, not a single one of my rent houses did their monthly rent go down, right? Those people in my rentals are pretty much impervious to changes in the market cycles. They don't even know, a lot of them don't know how to spell stock, and that's nothing against them, just is what it is. So, you got to make sure that you're taking runs off the board and banking away houses for a later day, because that income is what makes this business worth doing. And seize the day, take action, get out there, just buy a house, find a way to buy a house, and everything else kind of works out.
The big thing is some people, the doomsday, the real estate's going to crash in 2017, 2018. What's your take on that? Is that going to happen? Is it going to bust a little bit? Is it going to go real bad like it did, 07, la-da-da-da-da?
I don't think so, because what we're not seeing is there's not a debt bubble. I have not found yet a debt bubble, meaning even in places like Miami, where they're buying condos for stupid prices, it's like all cash transactions or 20% down. I don't see a lot of crazy debt being offered. So even if we do have a 5 or 10% correction, there's so much cash at play. I mean, I think a third of the first quarter sales have been all cash or something of that nature. So I think it protects the real estate market. I really do. Because even like North Dallas, where people are paying 15% more than a house was worth this time last year, they're putting 20-25% down. So even if we have a 10 or 15% correction, those houses aren't underwater. So they're actually okay, if that makes sense.
Yeah, will it level off like the bidding wars? People are ramping up prices in neighborhoods that I buy in. I buy a house for they're up 20-30%, and then will it eventually level off? Like, will it scare away the people that are rookies? Because that's what I see. I just see uneducated people coming into the market, buying up houses that I wouldn't buy, and then I don't know where these people are coming from. Are they going to disappear, or do I need to adjust my buying and my business model?
Oh, man. So the rookies that are flipping, yes, that'll dry up. But the rookies that are coming in and paying all cash or getting a 25% down in investor loan, they're here to stay, and they're gonna become more. There will be more of them, because they look at real estate different than people like me and you do that have been in this kind of the hard way. They look at it as a diversified return. And when you actually look at it like on a cash on cash return basis, if they don't want to do it full time, if they want to pay, I would argue that most real estate, if you put 25% down and you pay a full price, you're going to end up okay on a cash on cash return basis.
Sure. That's why that's the beauty of real estate.
It sucks for people like me and you that won't. It sucks for people like me and you that want big discounts, but it is what it is.
And it's still cash flows. I think well said. I think that's an excellent answer. I think if people are shifting their mind towards it, it is a safe investment. It's collateralized. They're going to get their investment back. They can eventually refinance, because lending will still stay where it's at. It's growing, and now you're opening up other areas of finance. Basically, my answer would be to myself, I just got to change my business model and stop relying on, buying everything at 70%. I might need to pony up and do 85. I don't know, 8.
The last couple rentals I bought
were 85 to 87 cents on the dollar. And here's why. I finally accepted, I swallowed the big pill. I finally accepted that if I was going to buy in the neighborhoods I wanted to buy, which is where everyone else wants to buy, I was going to have to, quote unquote, overpay. But I've decided to buy in nicer neighborhoods now that I'm experienced, and I've got some good cash flow portfolio, and we've got some cash that we do want to invest. So putting money down on houses is something that we're interested in. So there's still fantastic investment properties. And I look at this business different than everyone else, because this is when you buy a house, you have an inflation indexed annuity, but it's better than an inflation indexed annuity because it actually appreciates in value. So inflation hits, your taxes go up, your insurance goes up, so does your rent. And you get monthly income, and you have an appreciating asset base that actually ends up being worth a significant amount more than you ever paid for it. And the fact that you can apply 70 to 80% leverage to it and have someone else pay that off for you, there's just nothing better.
I know. That's why I'm in this game. All right. Well, Tim, it was so awesome to finally connect with you at this level. Can I send people to your website? Is that cool?
Yeah, I had my marketing guy create a little URL, just 2020rei.com/savvy landlord with two V's, as you know.
Yeah.
And if anybody would just like to talk to me or my team for about 15 minutes, let's just have a consultation. See if we can help you with some finance. If you've got money you want to invest, we've got a couple funds open. We do consulting for investors of all sizes. We've got a real estate brokerage and acquisitions company. And frankly, if it has to do with real estate investing, we can help your listeners.
All right. Fabulous. Well, it's been a pleasure. You're awesome. And just make more money. That's it.
Amen.
Investor Weekend is not far off, with over 10 information sessions to increase your portfolio. Log on to www.investorweekend.com. Whether you are a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Join us for a powerful, knowledge-packed weekend with over 10 informational sessions that are bound to enlarge your real estate investments. You will hear from the best national and local real estate investors that will share practical and relevant experiences with you, the investor. There will be several networking sessions to connect with other like-minded people for potential funding, partnerships, and yes, hot deals. Go to www.investorweekend.com. Did you know we meet once a month for the Landlord Lunch Meeting? The third Wednesday of every month. Go to landlordlunch.com.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.